Well, welcome everybody. It's 11 a.m. This is a military-run precision sort of webinar, so we're not going to wait for laggards. We're going to start. And I welcome everybody for this BGL hosted webinar. How accounting firms can help more of their self-managed super fund clients invest smarter, sleep easier, and lead happier lives in retirement. I'm going to be hosting the webinar. My name is Andrew Valamos. I'm the CEO and co-founder of OpenInvest, a fintech investing platform that we make available to self-directed investors. You can tell it's a fintech because I've got a black t-shirt with a logo on it. That's the compulsory uniform of fintechs, and I'm coming to you live from the presidential suite at the Springfield Lodge Hotel, King's Cross. Now, I'm going to introduce my my panelists in just a moment, but before I do, just a reminder, this webinar is organised as a lead into BGL's conference series RegTech around the country, coming soon, Sydney on the 1st of March, Brisbane the 2nd, Adelaide the 9th, and back to BGL and OpenInvest's hometown of Melbourne on the 16th of March. If you haven't registered, then there's still time, and OpenInvest is a proud sponsor of that conference series. Now, I'm proud to say and happy to say I'm joined today on this webinar by two terrific panelists and guests in Trent Doughty and David Smith. Before I introduce them properly, I'm just going to a quick introductory comment about the approach. We're going to have, it's a 1 hour long webinar. We're going to have pretty much 30 minutes for a conversation. I've got some questions and keen to hear from David and Trent. But then we're going to throw it open to questions from you, the audience, for the second half. And you can type those in. And Stacey, my colleague, is going to fire those at us at the halfway mark. Now to introduce Trent and David. Trent is the head of private wealth at Kelly+Partners Private Wealth. It's a top 20 accounting firm, or part of the Kelly+Partners accounting firm, top 20 firm, and I think the fastest growing firm in the country. Trent joined the firm as a partner in 2016. Prior to this, he was investment director at BT. He provides wholesale investment advice, asset allocation, implementation, and portfolio construction to high net worth families, individuals, super funds, and foundations. Trent has worked in global financial markets for more than 25 years in Australia and across the Asia Pacific region in Japan, Hong Kong, and Singapore. He's a member of the Graham Wood Foundation, which focuses on ethical and impact investing, and the Mongrels Men Health and Wellbeing Group, which helps men with mental health and wellbeing, a group co-founded by our mutual friend Tim Hewson. He's got a whole lot of degrees. It would take me too long to go through them all, and is a fan of the Bulldogs, which it must be the Sydney Bulldogs, not the Melbourne one. Welcome, Trent. Thank you for joining us. And David Smith. David is one of Australia's foremost consultants on technology and strategy to the accounting industry. I'm sure most of you, if not all of you, would know David. He was a partner in a national accounting firm, built and ran a software business that was then sold into MYOB, is a former consultant too, and was the CEO of Class Super, and was an initial director of Count Plus on its listing. David is a regular speaker on topics relating to the future of the accounting profession, business strategy, and innovation. He's a former president of the Institute of Chartered Accountants, a fellow of Chartered Accountants Australia and New Zealand, CPA Australia, and the Australian Institute of Company Directors. And I'm very proud to say he's a founding non-executive director and shareholder of OpenInvest. David is a St George fan. I won't bore you with my background, but I'm a St Kilda Football Club fan, which accounts for my wrinkled face and sometimes depressed outlook on life. Right, here's an introductory comment from me to set the scene, then I'm going to hand over to David. Self-managed super fund sector. It's an unusual, it's globally unique, and it's quite odd in some ways. That is, the data shows of the 600,000 self-managed super funds, 3/4 do not take investment advice. They do their own self-directed investing. That's 420 to 450,000 self-managed super funds. What do we know about them and their investment decision making? Well, in aggregate, the ATO data says that it's a pretty well diversified pool. but that's in aggregate across 600,000 funds. At an individual level, the anecdotal evidence, and pretty much all the accountants I speak to confirm this, and I'm keen to hear David and Trent's views on this in a moment, is that we have a lot of wacky or strange portfolios from self-managed super funds. Younger trustees, often too busy building a business or building their careers, have excessive amounts of their fund invested in cash because they haven't got the time to devote to investing properly. And older trustees who ought to be invested more conservatively have got very highly concentrated portfolios, largely in Australian top 10 shares, because that's what they've traditionally known and served them well in previous eras. And for large numbers of self-managed super fund trustees, they are beset with doubts and uncertainties and feelings of guilt as to whether they're doing the right thing. Right, with that introductory comment, let me hand over to Trent with my first question, if I may. Trent, head of the private wealth business within Kelly+Partners. Why do you think more self-managed super funds aren't seeking financial advice to put them on a safer path to a happier retirement?
Yeah, thanks, Andrew, and yeah, thanks for the introduction. Yeah, look, it's interesting a point you just made there about the cash holdings. If we look across the board at the SMSF clients throughout the Kelly+Partners business, and we look at the asset allocation, which is something that we're very passionate about in our business, making sure our clients' investment portfolios are invested with a correct asset allocation. Yeah, I'm a little bit shocked too that we do see very, very large cash balances across the board, and a lot of the time these cash balances are held for long periods of time, which makes absolutely no sense whatsoever if you're investing for the long term. I think you're right. I think a lot of it is to do with the fact that people are just so busy with their day-to-day lives. I know at Kelly+Partners, predominantly our client base is made up of small to medium-sized business owners, and those business owners are just way too busy to sort of really knuckle down and concentrate on spending the time to invest. So, and they're so busy too that they just, I think in the past too, they just haven't been bothered to go and seek help. I think also another big factor, Andrew, is I think the Royal Commission really sort of, knocked people around a bit in terms of the trust that they have around a lot of the financial advice institutions. And once again, certainly at Kelly+Partners, we've witnessed since the Royal Commission, a large number of clients, seeking independent advice from independent firms or seeking advice from their trusted accountants and trusted advisors, as opposed to sort of going to the big brand names. And I think the industry is making some great strides in earning that trust back, and I think it will take a long time, but certainly I think as time goes on, more and more people will come back to seeking advice. But yeah, I think just the day and age that we live in at the moment, with people's lives so busy, they really do need some help and need some guidance. And obviously there's different methods of doing that, and obviously OpenInvest is a great solution for us to be able to deliver that.
Thanks, Trent. Actually, keen to ask you about that a bit later, but about the solution that you've recently deployed. But David, a question, or Dave, before I ask you a question, do you want to add to?
Well, I think one of the issues with self-managed super that we need to bear in mind is the nature of who's in these super funds, because historically it's always been the domain pretty much of the business owner. Now that may be changing a bit as people, due to Keating's compulsory super, are starting to build up big balances now. That's a new place for SMSFs to play potentially. But historically it's been about the small business owner. And they've got a different psyche to many people. They're generally pretty confident. They know what they want. They feel as though that they can make their own decisions. And unfortunately, that means that quite often they make the wrong decisions because they tend to invest in what they know. And as an example, one of my clients I was talking to last week has just created a self-managed super fund. And what did he buy in it? He bought a piece of property because that's all he knows. And so there is an interesting challenge with this group that they've got this confidence because they've built their own business, but they really don't understand the full financial markets, and needing them to really understand that the message in investing over eons has been the word diversification, and many of those people don't understand that. And so there is a real need from the profession, from the media, to educate better about what these people need to be doing with their investments. And then the second question is, where do I go and find that help? And the Royal Commission has blown it up in a sense, because there is a big lack of trust, as Trent said. And I think that, that's where, playing and starting to provide offerings based around some big internationally known brands which are well and truly trusted provides that opportunity to build that trust with this group.
Thank you, David. A question for the two of you. You've both mentioned the Hayne Royal Commission, but of course there were so many self-managed super funds weren't seeking investment advice even before the Hayne Royal Commission. Could I ask you to comment on, it's written up in the press and referred to as the advice gap on a regular basis. What actually is the advice gap, and what do you think the implications of that are for accounting firms with private wealth divisions within them, or those that don't have them?
Yeah, certainly for us, Andrew, the advice gap for us is that on the retail financial planning side, post Royal Commission, retail financial advisors now have an obligation to take into account a client's entire financial situation. So it's just not a matter of just going, hey, listen, I've got a self-managed super fund. I need some help with investing, some money in that super fund. Financial advisors now, retail financial advisors now have an obligation to take into consideration every single aspect of a client's financial situation. That includes insurance and whatever they have outside of super as well, and budgeting and planning. And what for us the big gap there is that we have a lot of clients who do need that and do want that, but we also have a lot of clients who don't want to go through that full financial planning process. So then for us, it becomes, okay, if they don't want to go through the full financial planning process, do they qualify as a wholesale investor, and do they have the ability to make their own financial decisions, with the help of a financial advisor that provides general financial advice? And once again, what we find is that there's a lot of clients who, yes, they might meet the wholesale test, but they don't necessarily have the expertise to manage a portfolio or make decisions on that portfolio. So for us, that's the big gap. The big gap is you don't either qualify as a wholesale investor or don't meet that, or you don't want to go through the retail financial planning process. And there's a huge gap there in the middle of unadvised Australians and people who do need professional portfolio management. And as David correctly said, again, a asset allocation model and some diversification in the portfolio, but they don't want to pay to go through the financial planning process to get that, or they don't meet the wholesale test.
So it was Joe Hockey that wrecked this, basically, because it was in the early 2000s, about 2003, actually, when I was president of the Chartered Accountants at the time, that Joe Hockey brought in their reforms just before an election. And that's when we ended up with the unreadable SOA, fundamentally, right back then. And in my mind, that's still a fundamental issue that we have from a full advice point of view, is that the lawyers have control of it. And we've ended up with a document that doesn't achieve its end goal of really effectively communicating to an end investor. And the cost of producing it is far too high because of needing to think of every potential alternative under the sun. And so that's where a lot of this gap comes from, that we need to work out. And I know that the government, there's a lot of lobbying with government on this issue right now about how do we close the gap by allowing good advice to be given to people, which is not too cost prohibitive, but also is well communicated and easily understood. Because a lot of people who might go to their financial planner right now and getting full advice, I think are probably pretty disappointed by the outcome because of this sort of barrage of paperwork and the legalistic nature of the advice documents.
That's a great point. I made this point to ASIC myself, and it's that old phrase that don't make perfect the enemy of good. By making personal advice so robust and rigorous and perfectly documented in a legalistic way, it pushes the price up to such a level that unless you're already wealthy, it's uneconomic and unaffordable.
Yeah.
But you're right, there are policy reviews underway, and Treasury's leading the charge on that to try and bring about a more sensible outcome. But I would like to ask how Kelly+Partners is proactively seeking to solve its own perception of the advice gap amongst the broader accounting client base that the Kelly+Partners group is servicing.
Yeah, look, for us, we do offer currently the full range. So we do offer a wholesale investment advice, which is the side that I sit on. We also have retail financial advisors and financial planners in the business. The gap that I mentioned just before, those who don't meet the wholesale test, or those who don't want the SOA and the full financial planning process, we've now implemented the OpenInvest platform to service that gap. So for us, it's, we do get a lot of people, a lot of clients come to us and are saying, look, we need some help with, investment portfolio and such. So for us, OpenInvest and that platform is the best way for us to not only communicate that to the clients and give them a platform that they can use that's user friendly. It looks terrific, and it's cost effective. To your point there, Andrew, around the cost of an SOA and the cost of building these types of offerings. We want to be able to deliver something to the clients that's well managed, cost effective, looks great, is easy to use, using technology as a way to deliver this. And for Kelly+Partners, the best thing about it too is that it's scalable in that it allows us to service a very, very large group of people without us having to hire dozens and dozens of financial advisors. So I think that's just been such a great solution for us, we continue to see that building in the future.
And full credit to Kelly+Partners for recognising the issue, because I think there's too many accountants out there that are really ducking this issue. And in my mind, I always liken the role of an accountant to be a bit like a general practitioner, you're feeling a bit crook, so you get to the doctor and they will work it out and find the other expertises and services that I need to get well again. The accountant really should have the same role in a financial sense, to be that financial doctor where I say, well, I come along and my accountant will help me. And what really worries me, not just with SMSF, but with a whole lot of clients of accounting firms, is that there's this significant issue of a lot of people not getting advice on their retirement planning come investment, which means that they end up making really bad decisions. They get stock advice from their mate down the pub. They'll read an article on crypto and they'll think that that's the way to make a fortune. And somehow the profession needs to get on top of this and to really help people understand that this is like a hare and a tortoise thing. Slow and steady wins the race, and it needs to be better communicated so people understand that, and then find the right partners that are going to help me get there and help me select those partners, because it does come back to a lot of lack of trust here. There's been too many big disasters that have really put people off, which haven't helped this either. And that's where getting named international brands like the JP Morgans and the like, and the BlackRocks of the world is one way of trying to solve that particular issue.
Can I just add there, Andrew, that, I think, in terms of, across the broad community, if you were to, interview 1,000 people and ask them, who's one of their most trusted persons in their lives, probably accountants would be right up the top. And they're highly qualified people, and they're very sort of calm and sensible people. And I agree with David. I think, what we see at Kelly+Partners is a lot of clients coming to the accountant saying, hey, what do I do? Or, what should I be doing here? Or, how should I be investing their money? And hence why we created Kelly+Partners Private Wealth to assist those people. Yeah.
And Trent, one of the problems that we now have is that this heavy-handed regulation has got accountants running scared. So they're very frightened to have any conversation with their clients around any of this, because they think they're going to run foul of the regulation. And so that's, again, where using OpenInvest as an example, there needs to be solutions which accountants can say to their clients, have a look at this. It enables you to make your own investment decisions, but you're playing in the right marketplace with the right type of people. And we need to somehow get that message out there, that there is a way to get around the morass of regulation to still provide information to clients so that they can make the right decisions.
That's a great point, David, and also Trent. And I think that the clear distinction is that under the corporations law as it is now, information can be provided under the rubric of personal advice. It can be delivered as general advice, but accountants who are not licensed can provide factual information. And factual information doesn't require a license. It doesn't require a statement of advice. It is merely the provision of information.
Yeah. And Andrew, if I can just question you on this, because it's been said to me by a number of accountants, even looking at OpenInvest, of even some accountants are concerned even directing somebody to look at a website as advice.
Well, it's a good point, and it is the case, and this would be maybe taking us down a rabbit hole, but just to summarise it in a couple of sentences. If an accountant was to say, Fred and Wilma, your self-managed super fund portfolio is terrible, it's ridiculously concentrated, which is high risk. I recommend you invest via OpenInvest, choose one of the big asset managers available there, or to put it in Kelly+Partners terms, who has its own customized solution. I recommend you log on to the Kelly+Partners managed portfolio site and invest. Yes, that is advice. You are making a recommendation. But an accountant is well within its rights to say there are now easier, lower cost digital means to access top quality or better investment portfolios. I don't care which one you choose, but here's some solutions for you. And you're right, this is it. The good news is everything's changing very rapidly and within a relatively short space of time. Yes, an individual self-managed super fund or any person could go to OpenInvest and choose from BlackRock, Schroders or JP Morgan, but Vanguard will be offering their own portfolio soon enough. Lots of big global brands will be doing this. And I'm sure that those accounting firms or advice and accounting firms like Kelly+Partners that have the resources and the skill set and a proper constituted investment committee that can run portfolios, they'll be doing similar so that people will have that choice. And you're right, this information can be provided in a way that's not personal advice and indeed not any advice at all. I've got a question actually now for the two of you, because as David, you noted earlier, a self-managed super fund is just a structure. Behind it are real people, and they're often business owners, and they're often a matriarch and a patriarch of the family. Would the two of you like to make a comment on an accountant in that role of the trusted advisor to the family, as it were? What role can they play in relation to the adult children of the matriarch and the patriarch? And I say that in the context of a very weird boom over the last 2 years, really since COVID started. It's like a craze in investing via free trading apps or crypto booms or wacky things like NFTs. Actually, even online gambling is pretty much boomed around the world as well. So what role could accountants play actually potentially helping the broader family from all sorts of dangers that are lurking?
I have started to see, and I suspect Trent is probably already doing this, but I'm starting to see many accountants now talking to their clients about the next generation. That's partly driven by the big change in the wealth being transitioned from the baby boomers down to the next generations is part of the motivation for that. But also I think there is a feeling from many clients that they would like to get their family set up. And so in many accounting firms, particularly with financial planning arms, they are absolutely now with their clients assisting them, engaging with the next generation or two. Are you seeing that, Trent? Are you starting to work down that way?
Yeah, look, I think absolutely we feel a sense of obligation to all of our clients that, we, help their extended family. And we certainly offer that to all of our clients, that we say, look, if you have, friends, relatives, family that need help, but you're absolutely right, David, there's a huge wealth transfer going on right now. And, it's important that the next generation do understand the responsibility that they have to protect that wealth and grow that wealth, not only for themselves, but for the generation after that as well. So, this whole intergenerational wealth transfer and Andrew, I do get a bit alarmed. We do get approached quite often from people saying, can I open up a crypto account, or can I do this, or can I do this in my super? Can I buy cryptocurrencies, NFTs, the like? Look, we've really steered clear of all of that stuff. I think for us, it's just too. I like to use the word hazardous. And you're right. I see a lot of these investments as just another form of gambling. And yes, we do hear lots of good stories, but there's also lots of disasters out there too. So, I think it's, once again, it's up to us, accountants, wealth advisors, to hold clients' hands, the next generation's hands, and their kids and their family, to make sure that wealth is protected and invested into sensible assets that can build and grow over time.
I think there's an interesting issue here, though, that if you go, and I'm the oldest person in the room, but if you go back to when I was a kid, even in my 20s, no one of that age group when I was young would know what a stock or a share was, right? Whereas now a lot of these young kids do. So I actually see that as a positive in a way, that they may be more engageable about it, because A, you've got compulsory super, so they've got money being saved, which my generation didn't have, and B, they're, for like it or lump it, they are dabbling in this space. So I think that actually opens the door to engage further with them.
I think that's a great point, David. There's a positive side to that coin if we flip it over, because and again, that's partly technology makes it possible, because
yes,
if you had $500 to invest before technology opened up the easy means to open an account and invest something, well, no stockbroker or advisor would see you for $500, and most don't want to see you with $500,000. Hence, it has to be a technology solution.
Yeah.
Just a quick anecdote. I mean, it's an anecdote, but obviously, I'm in the investing game as a CEO of a platform business, but it's amazing how many ads I get served up on social media or even via my Gmail for the most ridiculous looking investment I don't normally do air quotes, but it's a webinar, opportunities for pink diamonds and any number of stock tipping or options trading programs and technical. It's rubbish. And Trent, you make a great point. You have clients or prospective clients talking to you about this stuff, but the terrifying element is that of the people that don't raise it with you. They might be clients of the accounting firm somewhere across the country. They never talk to the accountant potentially about what they're proposing. They just take advantage of these too good to be true opportunities, which are scams in different guise. Well, is there in fact, sorry, yes, let me pose the question a slightly different way if I can to the two of you. Clearly the two of you are saying that there is a positive proactive role that accountants can play. They know what's in the self-managed super fund because they do the returns and they see the portfolio. But what's the flip side of the positive way of raising different, more sensible ways of investing for the fund trustees? What's the flip side of an accountant not mentioning anything and just doing the returns? And so I was never asked. I didn't provide financial advice because that wasn't part of the service agreement, and we don't do that. And it's not my fault that the fund subsequently blew up. What is the risk of it? The
risk is you're putting your client at risk because someone else might. I think that's, as I say to accountants over and over and over again when I'm working with them, when I'm consulting to them, what clients are looking for is a broad-based financial advisor, not a narrow-based tax preparer. And what accountants need to learn is how to engage on that with clients more effectively to help unlock what their clients' needs are on a very broad spectrum, all of their financial affairs. And then they need to have solutions to help the client deal with those issues. And to just say, well, I'm not going to play in that space, which is a pretty important space, being people's retirement savings, a pretty critical thing for most people. And as you get older, like I am, it becomes even more critical. Accountants have an absolute obligation, in my opinion, to play in this space. And if they don't, there'll be people like Trent coming along who does provide that board-based financial advice, and people will think they'll start to gravitate to that broad-based advisor.
Well, that is a good point, actually, because if you're not solving a need for someone, for a client, there's two elements to it, really, isn't there, Dave? If you're not solving a need, then the client will think of you as being relegated to a narrow provider of discrete individual tasks.
Yep.
Well, they can be commoditized and you can lose but more broadly, I guess,
yep,
you can lose the whole relationship. If you're that holistic trusted advisor, you can't put that out to tender. You just have the trust or you don't. And then people don't quibble about the different components of work because you're providing a bigger service than just
yep,
tax preparation.
Yeah. Andrew, David used a word there that is a word that Brett Kelly, who's the founder of Kelly+Partners, drums into every single partner in the firm, and that is the word help. And Brett says, I just want you to help our clients. And I agree with David. If you're not offering that help, then you're just kind of leaving people to their own devices. And we've seen the consequences of that, as we said right at the start. People leaving money sitting in cash, earning 0% interest for 3 years. Not even keeping up with inflation. So.
And it's not just about investment, because the other part of this is insurance.
Yes.
And many accountants don't go there either. And yet ensuring that you're managing your risk is a critical component too. So it's, just to broaden it slightly out of just investment, insurance is also a critical component here.
Yeah.
Yeah, I mean, two great comments I just want to pick up on. There are a lot of great comments, but if I can just make two follow-up. That's a good point about risk. Risk is not just investing in 5 shares only and hoping for the best in 20 years' time. 5 shares being 5 blue chips. My theme or argument being no such thing as a blue chip anymore, given we live in a globalized, fast-moving and fast-moving world where technology changes and with huge numbers of geopolitical risks. 2 of them, right, literally on the front pages of the paper every day in the Russia, Ukraine, and China. Therefore, it's not possible to say that this is simple and individuals can just invest in blue chip shares. But at the other end of the spectrum, leaving money in a cash account, earning 0% for the long term, that's a massive risk. You're not going to be able to retire with dignity unless you're clever enough to have wealthy grandparents that are going to leave you a trust fund, which is not most people.
Those of us who are alive in the 70s and 80s know what high inflation was about. And there's nothing more that will erode your wealth more than a high inflation if you don't diversify and ensure you're in assets that protect you from inflation. And you look at where the markets are heading at the moment, it's once inflation starts to break out, it's a pretty hard genie to put back into the bottle.
Yeah. I think if I could just do one other follow-up point that's interesting as well, David, you talked about accountants being proactive and playing that role of holistic advisor, which means actually, well, it is up to me to help. Again, to use the Brett Kelly words, up to me to help. And I think the important point that the three of us are agreeing upon is we're not saying, which really was the case in a previous era, hey, just go through the very simple process of obtaining an AFSL and become a financial advisor, because that is not simple. And it is a complex process that is not within the normal day-to-day sphere and the training of most accountants. But I guess what we're saying, the good thing is you don't need to have that. If you have that division in-house, fine. If you don't have it, you don't need it, because thankfully there are technology, and it's not just us, there are others going to be doing this, and that's going to be great for choice.
Yeah, but ultimately as well, Andrew, is that even if you do go and get your AFSL, that doesn't get you where you need to get to, because you can't do the advice in an affordable way to the smaller investor. And, you know, it's you go back to the Commonwealth Bank when I was a kid. Right? Why do the Commonwealth Bank have so many customers? Because they gave out money boxes to 3-year-olds, right? And so it's the same issue here. If you're an accountant, the best thing you can do is trap the client early. Get the 20-year-olds, give the 20-year-olds some solutions, and they'll stay with you for life. And so there is a strategic opportunity here to engage with these younger people and to come up with solutions which are cost effective for them. And as they grow and build their wealth and build their businesses or whatever they're going to do, they can become a really valuable client.
Yeah, and I think they're going to trust and value that the guidance that was given, as you say, 5 years before or 20 years before, it puts them on the path to sensible investing, which they need to do to build their wealth, and B, it keeps them away from all of the crazy scams and nutty schemes that are out there. Thank you for that. Now, Stacey Beckley, OpenInvest Head of Marketing. We're halfway through or past halfway. Any questions that have come up that we can bring to the fore?
There are no questions posted yet. So if anyone does have questions, please feel free to post them now and I'll funnel them through. But just picking up on from my own perspective as an observer on a theme, I mean, there's very much a theme here around the ability of accountants to deliver engaging communication that is well understood by their clients, and really starting to sort of morph into this role of a coach, or I love the analogy of GP, David. I'm just wondering from your perspective, if there is any advice to the accountants on the call today around how they can really develop those skills.
You've hit on something which I'm quite passionate about. What accountants need to do is they need to put themselves in the shoes of their client and start to think about, how do I communicate to this individual in a way that they can understand it and get it simply and easily. You know, as a profession, we're very passionate about being technically correct, and I'm not trying to denigrate that at all, but you can be technically correct, and if the client doesn't understand the advice, what's the point? What we need to ensure is that we're technically correct, but then we communicate in such a way that the client can easily understand it and can make informed decisions. And I think the profession at large still struggles with that. As an example, many firms, when they're delivering their financial statements to the clients, will still, at least now in PDF form, not paper anymore, thank God, but still deliver to the client the big pile of tax returns, sets of accounts, all that sort of stuff, right? And we all know what the client does with that stuff is that they just file it and they don't read it 90% of the time. And yet the firms which are proactive then generate like a one-pager or something which summarizes all of that crap and puts it in front of the client and says, here's your financial position, here's what happened in an income sense, here's what your tax bill looks like, and they've got the information on their fingertips so they can make better decisions. Very few accountants start to think about, how do I communicate this in a way that my client can easily understand it and make decisions?
Thank you.
David.
Just a comment to everyone on the call or on the webinar. By all means, type up some. I'm now shouting now. I'm sorry. I just got a message saying I couldn't hear you very well. So apologies if I hadn't come through loudly enough. But for those who could hear me, I apologise for shouting in your face. But by all means, yes, please type in any questions, and Stacey will pass those through to us. Trent, you established and run the private wealth division within the Kelly+Partners group. Maybe you could make a comment about how you generally see go about communicating with accountants within the broader Kelly+Partners accounting firm network about the range of services and offerings that the private wealth division makes available and has.
Yeah, look, I think one of the things that I love about OpenInvest is just the delivery of the content and the way that the investment portfolio is delivered to clients has been something that has been engaging with the accountants has actually made it a bit easier for me, because I go and sit in a room in our North Sydney office as an example, and I did a demo of the system to 5 of the partners there just at the end of last year, and they were all blown away at just how good it looked and the look and feel of it, which I think is important, because once again, in Kelly+Partners, the accounting partners don't necessarily want to put something in front of their clients if it doesn't work or doesn't look good, because don't want to embarrass ourselves with something that piece of technology that doesn't work. So they were really pleased at the look and feel of it, the ability to deliver and push content through the website. I think was something that was very appealing, because once again, I think we all get our inboxes bombarded with a lot of emails and economic updates and what have you. I think it's nice with the OpenInvest website that you can just go to the app, or you can go to the website, and just the content is just pushed through to you, and you can just read it in your own time. I think that's a really nice feature. And the fact that you can log in, you can see all the investment positions there, you can track the portfolio performance. I think that all is very important. And I think for us, the way that I sort of just communicate with our partners internally is that I just sort of, as I say, sit in a room with a bunch of the partners and just give them a demo of the system and just show them what it looks like, how it works, and they can see how simple and easy it is. I think the other thing, Andrew, which is important too, is the sign-up process to OpenInvest is, I think, is very simple. It's very straightforward. It's not taxing. So once again, a lot of feedback we've had in the past, from clients is, onboarding to a lot of different platforms out there. The onboarding process can be quite cumbersome and can take weeks and weeks and weeks, and it's a real headache for not only the accountants but for the clients as well. The thing about OpenInvest that I've been able to communicate to our partners is that the onboarding process is very easy, streamlined. There's a help desk there to help people, and it's just type, click, upload, and away you go. So I think that makes the accountants' lives a lot easier as well too.
I think it's another good example of the putting oneself in the shoes of the client in a communication sense, that the sort of information being provided is all in bite-sized chunks, easy to absorb in simple language without all of the legalistic stuff getting in the way.
Yeah, well, and I agree wholeheartedly with the two of you, and thank you for those positive comments, Trent, about the OpenInvest technology. You made it, just to go back to the why tech, there's a very positive theme, I think, that the three of us have, and Stacey, you too, and that is that actually technology, when done well, can solve so many problems. Because you highlighted it earlier in your earlier comment, Trent, that, well, the other way of solving this advice gap problem is you hire scores of personal financial advisors and pay them not enough. Clearly, and that obviously is not a solution, because so many advisors are leaving the industry because of the regulatory cost that's been imposed, and there's just not there's not young advisors entering the industry in the numbers that we need to replace the ones leaving. And like all of these issues where there's a gap in the number of people who need help and the ability to solve that problem with people, or to solve that help with people, technology has to step up. And my own view is we are now at an unusual point. We're going to look back in 5 years and say, crikey, it's amazing we had the advice gap, because now, 5 years down the track, there's all sorts of awesome, trusted brands with tremendously engaging technology that solve this problem. It just so happens right at this minute, and has been for the last few years, as we know, it's been a predicament. We're just one entity coming to the fore to help solve it, but there'll be a lot of others as well, and that's a great thing for customers. And in particular, about something as important as retirement. It's last comment from me. It's not really meant to be about me commenting, but when I do talk to accountants, I think of this analogy, and or this scenario kind of is a crazy scenario where if an accountant's entirely focused on preparation of the most accurate, well-presented self-managed super fund accounts, I feel that it's a good outcome, just because, well, there's the accounts and they're lodged and they look terrific in the way that the debits add up, etc., with the credits. Well, if the fund is invested in a crazy portfolio concentrated in shares or largely in cash, it's actually a terrible outcome. And the superficial element of it looks nice, but it's not likely to lead to a happy, safe, dignified retirement for the trustees of the fund. Yeah,
Andrew, I just make a quick comment there. You mentioned the word safe. So one of the other things we love about OpenInvest is that everything's very transparent to the investor. So, I always cringe when I hear about scams out there in the market, where people have been provided, pieces of paper with statements saying, here's your statements on an Excel spreadsheet. That scares me when I hear things like that, manual statements. So once again, the beauty of OpenInvest is that a client gets a login, they get to see all the positions there. It's all very transparent. The fees are transparent. There's no hidden fees. I think that also for Kelly+Partners was a really important thing, is that, we want to be totally transparent with our clients. We want to be upfront about the fees. There's no surprises. And Open Markets delivers that in spades.
Yes, and that comes back to as well, having managed portfolios is the easiest way to achieve diversification, because if you try and create diversification on your own, you'll end up going insane trying to manage it. And so the use of managed portfolios is a really critical component.
Yep. Thank you for those comments. Stacey, have we got any of our attendees fired any questions in, apart from telling me off for not talking loudly enough?
No, Andrew, but just picking up on what both David and Trent are saying, it might be good to just maybe do a quick summary of not wanting to do a sales pitch, but a brief summary of the OpenInvest solution from the client's perspective, just so that everyone's kind of has a bit more of an understanding.
Yes, thank you, Stacey. I'm happy to do that. And of course, I would also say to all of the people who are tuning in, I look forward. I'm actually not only is OpenInvest is a sponsor of RegTech in those various capital cities, but I personally am going to be there and with colleagues as well. So by all means, would love to meet anyone interested in discussing what we do and how we can help in more detail. But at a superficial and very quick level, OpenInvest is an investment platform. We can present it for firms that have got a portfolio management background and skill and capability, which Trent and his team at Kelly+Partners clearly has. Then we present, we configure a solution so that Kelly+Partners has its own branded managed portfolio service. It's the Kelly+Partners brand, Kelly+Partners portfolios and Kelly+Partners content being pushed through to their clients as a means of giving them a model portfolio managed by the team at Kelly+Partners, all accessible from the Kelly+Partners website. But for firms who don't have that skill, they don't have that history and they don't want us, let's face it, if you haven't been doing this for 25 years like Trent has, you just can't pick up a skill of managing portfolios. So for those other firms, OpenInvest has its own branded marketplace at openinvest.com.au. And essentially our message to Australia's unadvised investors, whether they're a self-managed super fund or an individual, is, we don't know who the world's best asset manager is to manage your portfolio, but you can choose from between BlackRock, Schroders and JP Morgan. They're pretty trusted, extremely well-resourced Premier League brands, to use a different sporting term, and they'll look after you. And as David says, you don't need to build your own portfolio and manage it and change an allocation to US securities from European fixed interest. These guys do it for you. And not only do they do it, they'll tell you why they're doing what they're doing. And that's the two ways we do deploy the platform. Thank you, Stacey. Well, I was hoping to get a few other questions. Do you think I've missed anything, David, that would be useful to bring out, or Trent, in the form of what's going on out there at the moment? What more accountants can be thinking of, or the self-managed super fund sector in general?
I think accountants need to be, and it's skirting around the regulations here is the challenge, but clients need to be aware of the risks here. There are risks all over the place. And we've referred to it earlier on with, what you'll see in a stream on Instagram or somewhere else. You'll be seeing all of these crypto and other risks sitting out there. And accountants need to ensure that their clients are across this and understand what those risks are, because there is nothing worse to have a client who you see their wealth evaporate. And that is something which no accountant should ever want to be involved with. And so I really do think that by hook or by crook, ensuring your clients got their eyes open and understand the risks, and even if they're making their own decisions, they fully understand that there could be big risks if they're into single asset type investing.
That's a great comment. Trent, if I can do, in fact, let me hand over to you to add to make your own comment.
Yeah, look, my final comment would be this, is that, and Andrew, you mentioned it earlier about the holistic advice. Look, I'd probably just finish on that to say, I think, accountants do owe it to their clients to offer that sort of holistic advice and holistic service, and wrap their arms around a client and do protect them, as you say, rather than just punching out a tax return. So that's something that we've embraced at Kelly+Partners, and I can share with the group that has worked very, very well, because and David also mentioned this, is that with a client at Kelly+Partners, we have multiple touch points. So we're not just doing a tax return, we're doing their tax, we're doing their wealth, we're doing their insurance, we're giving them tax advice, we're giving them strategic advice around their business. So helping them with banking, all these types of things, home loans, we do finance. So, if they need any finance, we do that as well. So there's multiple touch points, there's multiple people involved in the organization. And we've found that to be not only extremely powerful, but the feedback that we get from clients is unbelievable. And we did an NPS survey of our clients recently, and we noticed a significant increase in the NPS scores and great feedback from those clients who had used those multiple touch points, because they said it's great. We just go to Kelly+Partners, we get this, we get that, we get everything. So yeah, I think that's important, Andrew, that the accountants are providing that holistic service, and obviously OpenInvest just plugs into that beautifully and allows us to deliver that solution.
We at Smithink have developed what we call our 10 by 10 needs review, which is 100 questions you can talk to a client about to try and unlock that holistic advice and find out what their needs are. If anyone's interested in that, you can sort of go to smithink.com and send me a message and I'll send it to you. But you need to have a dialogue. You need to develop the dialogue to be able to unlock those opportunities and to find out what really is the earworm in your client's mind to the things they're trying to solve.
Yeah, or in fact, multiple things, David. And that's a great point that you both used the word holistic advice, which is the right way to think about the family or the individual and the large number of needs they have. And it goes back to the word you used, Trent, earlier, which is help, because they do need help. And it's not of benefit for an accounting firm merely to provide slithers of help or specific tasks only, when there's a broader array of issues that the individual does need help with. And no one's better placed than the accountant to provide that. We're running out of time. We've got a couple of minutes left. We do have a question. I'm going to try and get to it. I'm going to hit the chat button, see if I can in 2 minutes. Hamish, thank you. Why, when the average investment manager cannot do as well as the ASX index, would you trust a financial advisor? Well, I'm going to have a crack at that, and by all means, the others can come in as well. You cannot, in the ASX index, well, yes, you can pick an index and invest in an ETF that covers one of the many ASX indices. That doesn't give you exposure to other asset classes like international shares from the US or Asian shares. It doesn't give you exposure to fixed interest. So it's just not so simple as to say I've invested in an ASX 200. That's actually risky. That's a risky investment in my view. And a diversified portfolio covering all asset classes is a better outcome, whether you obtain that from a specific financial advisor through a traditional bespoke face-to-face process or digitally via the Kelly+Partners model portfolio service or a top tier asset manager on the OpenInvest marketplace. Doesn't really matter. It's the diversified portfolio that does matter. I hope I've not dealt that in the only last couple of minutes that we had. Well, Hamish, what we might do, Hamish, come and see me if you can, if you're coming to one of the BGL conferences, RegTech, because I'd love to have this conversation with you in more detail. It's not, there are different indices. It's a matter of not picking one, but diversifying across asset classes that history shows over the last 100 years gives the best outcome in the long run.
Yeah,
but of
that's
course,
right.
Sorry.
Oh, no, I was just going to add there. Yeah, look, if you look at our portfolios, we use, Aussie equities, global equities, property, fixed income, private debt, private credit. There's multiple asset classes. We've even in our growth portfolio, we even have global natural resources, which is an area that in inflationary environments does really, really well. So we have exposure to global natural resources. So yeah, it's not just a matter of going, okay, well, let's buy some shares or let's buy the ASX index or global index. It's as you correctly point out, Andrew, Hamish, we certainly espouse that having a diversified portfolio across multiple asset classes over the long term will give you best results.
Thank you. Now we've run out of time. Hamish, done a follow-up. We can definitely have a conversation at the conference. I'm going to conclude by thanking my co-panelists, David Smith from Smithink.com. Reach out to David for guidance, help, tips, and assistance as Australia's #1 accounting industry consultant and commentator, and Trent Doughty, head of the Kelly+Partners private wealth business. Thank you from OpenInvest. Thank you. We look forward to meeting you at the BGL RegTech conference. And of course, if anyone's got questions in the meantime, of course, you can reach out to us at openinvest.com.au or hit me up on LinkedIn. And very happy to meet you. Thank you, everybody, and have a super day. Thank you again, Trent and David. And thank you, Stacey.